over the next 45 minutes or so, 40 minutes, I think, we're going to make regulation sing a little bit here on the stage for you. You made your views very clear in those polling questions just now as well, so we will address that too. We've got three extremely well-positioned and well-versed panelists to throw this subject around, from the banking sector, from the regulatory authority, and from the Securities Exchange. There is a lot to talk about and not much time, so I will get on to making this intro as brief as I can. We all know the macro context well enough, but specifically on regulation, I think the sense is since 2008 there has been an onslaught, what many call an onslaught of measures, which many are now blaming for a lack of liquidity, for banks not being able to lend, for stresses in the system. The FSB, the ECB, the Bank of England are all making noises about recalibration of the rules, so we will talk about that. That at least seems to be the mood music from policymakers in the West. Here in the Gulf, things are also clearly happening. The central bank plans new rules for banks by the end of the year, full Basel III compliance planned by the end of 2018. That's something, of course, we'll talk to Alex Thursby about. ADGM last year put in place draft laws, a number of draft laws. We will speak to Richard about those. The question is, though, will you here in this region, in the context of the bigger picture, find the right balance to attract and keep reputable business in the region? Let me introduce our panel. Richard Teng, next to me, the Chief Executive of the Financial Services Regulatory Authority, ADGM. Rashed Abdul Kareem Baloushi, the CEO of ADX, the Securities Exchange here, of course, and Alex Thursby, Group Chief Executive of the National Bank of Abu Dhabi. Gentlemen, many thanks to all of you. Alex, let me start big picture with you. Is it time for a rethink? Is it time for some recalibration? Has the pendulum swung too far?
Thank you. My sense is, yes, the pendulum has gone too far, and we cannot forgive what the industry did that led up to 2008. And as an industry, I think we have to accept that we have to regain the trust of people who bank. And I think that is being done. And why? It's good for business, for one thing. But we are creating a regulatory environment driven by standardization, high-end police intensity that is beginning to stultify. And if I can just give one example, if you look at global fixed income markets at the moment, the buy side, which traditionally has been the stabilizing factor in markets, it's where the market makers are, it's where the market makers supported markets at difficult periods, used to be done by the banks. Unfortunately, with various, in some cases, very stringent regulation on capital, the banks have nearly withdrawn from that.
Yep.
And for those who understand cricket or baseball, that backstop is nearly disappeared. This is quite concerning, and you start to see much more volatility in the markets. Some 70–80% of the holdings of banks have disappeared, which indicates proof points. And what concerns me is that when you do have a serious global liquidity event, and there will be one at some point, the backstops won't be there. So that's just one example. So I feel that we are at a stage where we've got to reflect greatly on bringing the balance slightly back.
Yeah.
Get it in the middle.
Let me ask you, Rashed, you were at the G20 last week. How difficult is it for you, the UAE, and other players in this region to get that seat at the table, to be included in those discussions on regulation that you need to be included in?
I think it's to get the right sets of rules, regulations to satisfy everybody would be, in a way, complicated or hard. But that doesn't mean we are not doing a good job. Talking about the regulation specifically, we needed to tune up and to develop and to have new rules and regulations last year, for example. As a result, when you look at what we have done, there are 7 new rules and regulations were issued last year. And they were getting the international best practice, which was applicable to our environment, to our needs. The year before, there are about 13 rules and regulations were introduced. And I'm very sure that this year, we're going to go into a more developed phase that would require more rules, more regulations to be adopted, to be implemented and adhered by. So what I'm trying to see here, we are in a very good situation that to adhere, to accept, and to adopt the rules, regulations, and we are very fast of adopting it and moving it forward.
Just on the back of that, excuse me for interrupting, how attractive would you say your market is right now? I want to get onto some details in a moment on listings, on IPOs, get to some specifics there, but how attractive is the market to foreign players? How difficult is it to find the right balance when we talk about regulation?
Even though that we kept hearing that 2005 had some difficulties, challenges, and we kept hearing that it was not attractive enough for investors to come into the stock market, for example, numbers shows that there are 8,200 new records. 8,200 investors came and opened an account in ADX. Only 3,300 locals. The rest are international. And when I'm talking about the boundary outside the Arab nations, I'm talking about 2,230. January and February, we see another positive numbers. You talked about the institutional. We've seen the shares which are owned by the institutional and institutional investors. I'm talking about the foreign institutional investors. We're talking about 40.1 billion dirhams.
Yeah.
It's an increase of 8%. So these numbers shows, and I could keep going, I could keep going, but these numbers shows still the situation attractive for investment here.
But at the same time, forgive me for pushing back on this, at the same time there are a number of large private companies from the region here who are looking to London to list rather than in your home market.
It's, first of all, it depends on the company itself. Some of them, they want to do it differently. It's kind of a choice to do it differently. And the idea of going internationally at that time was due to some obstacles with the companies law. That has been solved. As we talk today, the problem which was causing the companies to go abroad has been solved, discussed, and it's been over. So now we are talking, and in these days we are talking to companies, and there are a queue of companies trying to go public and be listed in one of the exchanges.
Okay, we're going to come back to this. Richard, your chair stood up on this stage yesterday and I think mentioned Macquarie and Aberdeen Asset Management as two big players you're talking to now. Should we take that as a really positive indication of how well ADGM is being received externally, and how many other big players have you got on your list?
I think to set the stage, ADGM is established with the specific purpose to fulfill Abu Dhabi's ambition to be an international financial services center. On that front, we are here to service both the local institutions, be it market infrastructure players, local banks, other financial institutions, as well as enterprises. With our unique proposition, which I term as the ADGM advantage in terms of the spectrum of legal entities that we have created for family offices, for fund registration, for trust structure. Currently, in the past, people have to go all over the world in this region, and Middle East and Africa are key users of financial services around the world. But now they can do all these things in ADGM. So I think that's something that we're trying to anchor more activities within the UAE. The second, in terms of international institutions, international enterprises, with the benefit of Abu Dhabi, given this political security, stability, world-class infrastructure, as you can see here, availability of talent, we become a natural magnet for institutions wishing to service this fast-growing hub. If you look, I mean, markets go through volatility. But if you look at this particular region, Middle East, Africa, South Asia, in terms of demographics growth, you're going to see a huge increase in population in terms of middle class in the next few decades. And that will drive demand, consumption, demand for financial services, financial intermediation. So this is an important region which may not be, for most financial institutions and enterprises, unless you're here, you may not be able to service this region that effectively.
Richard, how far are you prepared to push on the regulation front? I mean, it's something we talked about earlier, this trying to find this balance between giving business the oxygen they need and stifling business.
Maybe on that front, I'd just like to echo what Alex has just said. I think the environment that we are operating in today is largely a product of the G20 regulatory reforms put in place post-financial crisis. There are 4 specific key agendas. 1, to make financial institutions safer through capital buffers, through liquidity requirements. 2nd, to address the issue of moral hazard, too big to fail institutions. The 3rd, in the area of OTC derivatives. And 4th, in the whole area of oversight and regulation of shadow banking.
All right, sorry to interrupt. Let me rephrase the question then. Is what you're given, that context you're given,
right,
an easy context in which to work? For you, for ADGM, here in the UAE?
Absolutely. So I'm just trying to go through, the accumulation of a lot of those measures independently on its standalone basis, it may be effective in addressing some areas, but not in other areas. We're just talking about it in terms of too big to fail. Now you have more assets consolidated in the hands of fewer institutions than before. So are some of those measures effective? In the area of OTC derivatives, are those measures effective? In the area of shadow banking, if you look at China, I think it's question mark, are those effective? But when taken together, then it makes the life of financial institutions very difficult. Financial exclusion is happening. If you look at correspondent banking, it has been impacted. So as regulators, we have to be very mindful of those. If you look at job growth within financial services in the last few years, it's no surprise that compliance and risk management job increased the most. As regulators, we have a twisted vested interest in that front to write more rules and regulation. But that's stifling innovation, that's stifling competitiveness and the business of financial institutions. So we have to be very careful. And coming to your point, ADGM has the right balance. While we are aligned to international standards, we tailor for the needs of financial institutions in the respective front.
And that's the feedback you're getting from the businesses coming to do business with you? That's the feedback you're getting from the Macquaries and the Aberdeen Asset Managements as well?
Not only them, but also the local institutions as well.
Do you spend a lot of, quick final question to you before we move on, do you spend a lot of your time batting back the question, do we need 2 financial centers when DIFC is just down the road?
Well, again, it goes back to what I've mentioned just now. Middle East, Africa are key users of financial services around the world today. But we need more of those activities to be anchored here in the Middle East. Why is that not happening in the past? Because the regulatory environment, the rules and regulations, the ecosystem may not be built up as such. Now we have that.
Okay. Are the banks ready for Basel III here?
Sorry?
Are the banks ready for Basel III?
Well, without being too technical, the paper comes out from the central bank in April. And may I, sort of with deep respect, probably take it back the other way. Basel III is an attempt to standardize. I find it very difficult to believe that even amongst the G20 countries, there will be an agreement fully. And an example more recently is the adjustment of capital and expected losses, which is going around in circles even amongst the Basel III members. And in my view, it'll be very difficult. We will say globally there is a Basel III consistency, but the reality is there'll be so many country decisions taken that will create regulatory arbitrage. And I think regulatory arbitrage, when you purport to be standardized, is very dangerous. Regulatory arbitrage where you don't purport to be standard is maybe slightly different. Direct answer to your question, I believe that the understanding of Basel III is getting deeper ingrained into the market. The understanding of the new liquidity rules, and we at MBAD are right now going through the core liquidity ratio tests with the central bank as the first bank in the environment. There are other banks who are in the queue to do such, and that is part of Basel III. The issue will be going longer term, will Basel III be, if we abide by it in its literal sense, fully, will it be good for the UAE? And I think this gets back to the G20 issue that you raised. The major financial centers outside London and New York, and that's Hong Kong, Singapore, Dubai, Abu Dhabi, they have no voice at G20. And I think this is extremely dangerous because the requirement of a financial center, whether it be regional or global, is very different for a domestic financial system. And it is important that regulators and Basel III understand why they're needed, why not to regulate them with a firm heel, and in fact, insist on standards being raised, but let them thrive, because they're important for the world. And I have concerns that Basel III doesn't hear the emerging market's voice.
Just very quickly on that, and then I want to bring it back regionally, but Saudi is at that table and represents the region, right? Do they speak well enough for the region?
I think it's hard for the Saudis to do so. I don't think anyone deliberately doesn't speak. And I don't think China deliberately doesn't speak for Hong Kong. I don't think Indonesia doesn't deliberately not speak for Singapore. The reality is that the inputs that you get are predominated by your domestic marketplace. And your domestic marketplace in Saudi is extremely different. The financial system is extremely different to the financial system that we here in the UAE are trying to create. And that voice, therefore, doesn't get through. And if it does, it isn't with the full end-to-end knowledge that is required when you negotiate and argue.
Rashed, I want to come back to ADX, listings, IPOs. You seem optimistic. I would like to talk about transparency, and in particular, why you think shares and companies are still trading so much on rumor here, and what is being done to address that.
Let's talk about the transparency. Today, when we started the market, by the way, we were established at year 2000. At the beginning, we have asked the listed companies to submit their financial statements based on international accounting standard. Then, a few years after that, we went into the IFRS standard, and this is the international best practice. Then, 2004, we have introduced the corporate governance, and we did see the positive feedback, especially at the initial stage from the banking sectors. They were all positive, and they were all reacting toward the corporate governance. Today, the transparency and disclosure, according to the rules and regulations, for example, the last disclosure was 98%. There's one company, a broad company, did not disclose based on to the international standards. Then there are issues come with the transparency and disclosure, saying what if a company has rumors, or what if a company has something. All the steps that we take are following the international best practice. As a matter of fact, today I have found out that there are some rules and regulations that we implement here in Abu Dhabi is even more advanced than the international standards.
But is it solving the problem?
Is that the problem?
Is it solving the problem?
Solving the problem? What's the problem?
A lack of transparency to a large extent.
It's transparency is there. It's just a culture, because even yesterday, I got so many questions outside here. I could tell the questions are coming from a personal background, from a personal point of view. But again, as a rules, regulations, as the books, as the legal framework, the transparency and disclosure, which is implemented here in UAE, it is based onto the international best practice. One. Two, when there's a misuse of these rules, regulations, the reaction is there. But that doesn't mean, again, this is the question, that doesn't mean we have to announce every single action toward a situation. But it is there. It is there, and we have seen here the reaction. At one point, cases were taken to the jail.
Yeah.
So it is adhering by the international best practice.
Richard, do you find yourself having to address those sorts of questions as well?
Those, as well as the issue of regulations that we go back on, if you look at internationally, only 40% of enterprise value are listed today. And that is due to the cost of regulations and the cost of compliance, because most of them are in either family hands or taken private by private equity. So again, there is a cost to regulations, and transparency could be a good way to address some of these overburdening regulatory rules that we see.
Regarding your draft regulation, when is all that going to be ready?
Oh, the draft regulations has been enacted in October, so we have gone live. So we are now in the process of taking applications, which include the two enterprises that you mentioned just now.
But you're ready now, are you?
We are ready, yes. So the rules and regulations, we are unique. So if I can just expound on it, we are integrated regulator that cuts across banking, insurance, as well as capital markets, intermediaries, and market infrastructure. But we are also tasked to really develop the ecosystem, because it's not only about rules and regulations when you need to support the growth of a financial services center. It's the different pillars, it's the different parts. What do stakeholders like MBED need, ADX need, etc., in order to build that conducive ecosystem. And as our chairman has mentioned yesterday, one of the areas that we're looking at is how to build a conducive FinTech ecosystem within Abu Dhabi to service the GCC as well. So we are very excited with this journey. We are working on the different pillars within the financial ecosystem, and hopefully we can build that very conducive environment with our one-stop shop business registration, amongst other things, to really make it very conducive for businesses to operate.
Is that something, that idea, something that excites the banks?
Yes, it's very exciting to the bank because it allows us to create a regional proposition in wealth management and in our markets areas, etc. So I think the Abu Dhabi Global Marketplace and the UAE Central Bank are slowly coming together as to how to affect that for local institutions. I think for international institutions, it's there now.
How good are regulators at keeping up with all these changes in technology? And FinTech is a great example of that. How much of a challenge is that?
My sense, and I'll probably be shot for saying this, regulators generally in this world, as it stands at the moment, are looking backward. And they're gumming up the system. And what worries me is they're not looking forward at the big macro things. And, you know, if I said, what are the two things that worry me, that I think regulators globally should be discussing at the moment, rather than getting into every nook and cranny of a bank, it should be, one, cybersecurity. There's an enormous damage can be done to a financial system if someone is able to attack and attack quickly. The second thing is global liquidity and the rules and understanding of a liquidity event happening, not necessarily around economic realities at the time, but rather through market volatility. And the owners of liquidity right now, you know, you've got funds that are taking deposits and not putting them into various instruments, capital market instruments, but rather doing trade finance or loans.
Yep.
So you've taken your classical mediation between depositor and borrower, and it's moving into not a black market, but it's moving into a non-regulatory environment. And those institutions are not as well in control of liquidity as the global banking system is. What 2008 taught the banks was to get their act together about how to manage liquidity. And I think regulators have done a very good job. But there's the known consequences that I think are beginning to come about. And I think these are the two areas that regulators now really need to focus on. I mean, the example that HSBC had in the UK, they were under attack about 2 months ago for 3 solid days. 3 days. There was a cyber security war going on, which HSBC won.
Yeah.
Had they lost that, the domino effect is enormous. They're in 65 countries. They print currency in Hong Kong. The whole loss of confidence in the system could have been enormous.
Richard, you brought up FinTech. I'd be interested to hear your response to that, how forward-looking you feel the Financial Services Regulatory Authority is, and how you address those issues that Alex has just raised.
I think it depends on where you are looking at. If you look at the FinTech space in US and China, it's extremely developed. And the regulators are sort of struggling. As with all regulators, we are either half a step behind or 1 step behind. But we're trying our best. But some of the initiatives that we are looking at, be it either in terms of growth initiative or regulatory initiative, trying to regulate the FinTech space, may not seem to show that we truly understand the FinTech area. They are extremely innovative. They thrive on very little regulation at this point in time. If you apply the same regulations and standards to them, they may not be able to do that well, for instance. But those are for startups. But FinTech is also extremely useful for the existing financial institutions. We were at G20 last week in Shanghai, and it was told to us that half of the commercial banking branches in China are unprofitable. It could be closed down in the imminent future. Why is that the case? Because China has transformed itself in terms of mobile payment. A lot of money go through some of these mobile payment providers, which are less likely regulated. They have grown to become SIFIs in their own manner, but the regulation has not quite caught up with them.
I'm very wary of the time, and there are a few other bits and pieces I want to cover here before we close. This spat, or so-called spat, with the US. I know the Bahraini central bank governor, the UAE central bank governor has spoken to the US. They want the authorities there to clarify regulation for US banks doing business with banks here in the region. Where are we on that now, Alex? How easy is it for the system in the US to provide the clarity that your banks and your institutions here need? Well, I would imagine very, very hard, right?
I was very fortunate to sit at a meeting in the Fed for 2 days, and other regulators, US clearers, central bank governors from the region, and the main, I would say, SIFI-related banks, if you wish to call them that. It's a very complex environment, and I think it stretches even into, the initial ecstasy of people saying, what about Iran? The US regulatory environment is very complex. We all used to think that we had one regulator, we had to abide by that regulator, whether it be the OCC, whether it be the Fed, etc. But what since 2008 has caused is an amalgamation of various agencies that are non-related, like the Justice Department, like the New York Financial Services, dare I say Congress, who influences the Justice Department, which means you think you've got your act together, you're playing by the rules here, but there's another set of rules, in some cases politically motivated, and I think banks have found that, that are different. So we have a business, very good business in the US. We have to constituent 5 or 6 different bodies. The Fed, the OCC, OFAC, New York Financial Services Regulator, which we don't have to do, but they do have influence, and the Justice Department, which we haven't started. So it is very hard for these guys to come to agreement. Even if the Fed and the OCC and OFAC say yes, You do one little thing wrong, there is the potential
Yep.
that the Justice Department will come and whack you very hard. And I think the meeting in New York was to try and bring that clarity and to use the US banks to be involved in the situation as well. It was a brave attempt. I think our governor is fighting very hard, but it will be interesting to see where it ends up.
Let me, just on the back of that, Iran. I want to ask you about Iran and doing business with Iran. The question has to be, how you capture more business coming out of Iran within the context that we've just talked about. Is there any business coming out of Iran for you guys right now?
Well, the reality of the situation is this, and it goes a little bit back to what I've just said. The reality of the situation is there has been no lifting in any way whatsoever by OFAC of payment, currency flow of the US dollar with Iran. So in other words, what I'm saying is no bank can do a transaction with Iran that involves US dollars today. There's been no lifting. In fact, it's probably a little bit more extreme where regulators are saying, do not involve yourself with Iranian banks in any way whatsoever on the pretext that they will meet certain milestones under the agreed sanctions. And if you do, you're going to get fined.
Yep.
So I think the reality of the situation is, from a banking point of view, it's closed door. For now.
You want to leave that one to Alex? The Iranian question. I guess we'll leave that one there. Let me, all right, we've got a little bit more time. I want to come back, Rashed, to foreign players, you attracting foreign players to list in your market here. Can you give us a little bit more specifics, and I wear a journalist hat here when I ask this, on the sorts of companies we're going to see, where these companies are coming from, and the sorts of numbers we're looking at here?
The numbers and the factors, the elements, and all the pillars that make up the economy here in UAE and Abu Dhabi very positive. So this makes either investors, listed companies, and even private entities looking at this region and trying to take opportunity out of that. Richard and I, last week we were in Shanghai, and to be frank with you, before I went to Shanghai, I had almost didn't know what to expect from there. Believe it or not, I've seen a very positive feedback coming from China to here. And they were even making it specific that they are looking at the Islamic products, and they are looking at investment here. And we have a plan, even today we have put the plan for that, is to invite the Chinese assets management companies, banks, exchanges to promote for themselves here, and we're going to do the opposite there.
And how quickly is this going to happen?
It is very quickly, because when I was there, we put a plan in the summer. We said maybe it's going to be hot. It's not hot. They're going to come. So it is very quick. They're going to be here. We already started the plan, by the way. We had this morning a meeting, and we signed what to do next. So the beauty about dealing here in UAE, we move very fast.
The sense, Richard, I'm getting from Rashed, the UAE has become a much more friendly place to do business. How much friendlier does it need to become from here?
Abu Dhabi has always been friendly in terms of doing business. But I think it's creating international awareness of what platform we offer. I think in the past, the awareness level could be lower. Increasingly, as we step out our international outreach and engagement, that awareness then become very strong. And you can see a number of study visits and trips coming our way to explore businesses, to explore the landscape, how they can hub here and anchor the activities here to service the region. And they are excited, so are we.
In terms of the regulation, though, we heard the polls at the start. When do we get to the right balance, in your view?
I do think that after every crisis, the pendulum will shift too much to the right. It will move back to the center over a period of time when, global regulators, global financial institutions, enterprises discovered that, look, this is too stifling. you can't really conduct the financial intimidation that you need to do. So it has happened after every crisis. After the Asian financial crisis, you see that. After the global financial crisis, we are looking at that at this point in time. So I have every confidence that you're stripped back to the center. Having said that, I think it is the onus is on each and every regulator to look at ways to try to mitigate that, to try to support our institutions in terms of their innovation, in terms of competing internationally, and that's what our mandate is at ADGM.
Is there enough consistency, Rashed, across the region, enough commonality when it comes to regulation? And if not, how can we address that and put a little more consistency in place?
The regulatory framework and the GCC specifically, they are close to each other. And they are getting closer and closer. We have an Arab Federation of Exchanges. And last time we had a meeting and we've been discussing the passporting method, which means you open an account in Oman, for example, by default, I will honor that process and I will take it by default. I don't need to ask the investors to come and get me new papers. And this is halfway through now to be done in the GCC. I know at the authority level, they are trying to get the disclosure and transparency close to each other. Today, for example, Saudi Arabia, they have announced that they will disclose the name of the shareholders. The first exchange have done that in the area, ADX. And now it is spread it in other exchanges, which means we are getting closer and closer in terms of the rules, regulation, disclosure processes, and even the procedure.
I guess on commonality, let me finish up with this question because it sits quite well on the back of Yanis Varoufakis as well, talking Europe. When we look at the experience in Europe now, it's a slightly sort of tongue-in-cheek question, part of it at least. When we look at Europe, is it time to put this idea of a common currency to bed here in the region? Let me start with you, Alex.
It's a loaded question. What did Yanis say?
I don't know if he was asked that, actually.
Look, my sense is the United States of America, the United States of Europe. Why are they different? The United States of America emotionally is one country, despite, all of the complexities of regional jibing, etc. It is one country. It doesn't blame a currency from where you're poor in Arkansas or you're rich in New York. And my fundamental view is that there is enough decentralization that allows for the balances, although I think America has to do more, to decentralize into city-states, a lot more economic power. When I look at the United States of Europe, there is the diversity of Arkansas and New York, but there's not the reality of rallying behind it. And my sense is that the countries who are part of the economic union, or the European Union, sorry, that stayed out of the currency have a lot more flexibility,
right,
and a lot more ability to react quickly to events in the world.
I'm going to push you on an answer to the question.
I think if somebody would answer that question, would be Mansour. He's the one who's dealing with that for whole of his life. So I don't think I could personally talk in front of him. It's his game.
You want to say something on it, Richard?
No, I think there are many other more things that you need to do even before you consider that. Lowering the investment hurdles, the trade flows, the capital flows, all those have to be done first before you can consider that particular step.
All right, I'm going to leave it there. Thank you very much indeed, gentlemen. Alex Thursby, Richard Teng, and Rashed Abdul, Kareem Baloushi. Thank you very much indeed, gentlemen.